So the topic of this one is called types of markets. So types of markets is what we're going to be looking to cover. If you have missed any of the previous sessions that we've had, you will see they are highlighted in green there. We covered an introduction to gold trading, and we also covered risk management as well. So in them two sessions, we showed super value in there, and hopefully you guys who are on that call got some great value as well. If you happen to miss them sessions, then they are available in YouTube. So the links, I think, did get sent out in the Telegram channel. So please make sure you watch them back. And if you've already watched it, then re-watch it again, because it always pick up something new when you watch something more than once. But with that being said, we're going to crack on with types of markets, which is the topic for tonight's session. So types of markets. So what I mean by that is basically understanding what you can trade beyond gold. So at the moment, you're in the Telegram channel, you're taking signals from our expert trader Kay, and at the moment we focus on gold only, so XAU USD. And the idea behind this session is to try and expose you to what other markets there are out there, and potentially get you to trade potentially other pairs as well. And this is where now things start to get a lot more interesting, because we're looking to add as much tools to your hopefully your armor, should I say, and give you that opportunity in the markets to hopefully profit a lot more. So like I said, why does this matter? So at the moment you're trading gold, yeah, which is XAU USD. You go onto your MetaTrader once you get a signal, and then what you do is that you'll place a trade on XAU USD, and most of the time we'll go on to hit profits, and happy days, we're all good. But I want you to know that there are other markets out there. And so for those that are really interested in actually learning to trade and actually really take this to the next level, I want to show you that there are more opportunities out there. There's more setups out there as well, and understand that there are different markets out there other than gold, but also they exhibit different behaviors. And if you start to look at potentially more pairs, you may actually start to find, like I said, more setups, but also look to build your consistency even more. You know, there will be times when you'll look at the charts and, you know, Kay might mention that, oh, there's not enough volume in the market today, or there's not much opportunity today, you know, the markets might not be moving. But there might be other pairs out there that will be moving. So potentially there could be other setups elsewhere as well. So in this type of session, and in the sessions going forward as well, there'll hopefully be maybe less slides and more actual practicals in TradingView. Now at the start you'll probably see a bit of theory and stuff, and you'll see a few slides here and there, and there'll be opportunities for you to like take sort of screenshots as well, or watch them back. But ideally I want to get to that point where we start to spend more of the time on the charts, and where you can really start to see things happening and really start to learn. And this particular slide here, yes, it's quite a large amount of writing on it, and it's quite a big table. But if you want, take a screenshot of this. It's almost like a one-stop shop where you understand what types of markets they are. Now, I'll start from the top. So we've got Forex, first of all. So Forex is something that you've probably heard of already. And essentially that's foreign exchange, and it's where you are basically trading currencies against each other. So you'll recognize that GBP USD is the pound versus the dollar. Euro USD is the euro against the US dollar, and then you've got USD JPY, which is the US dollar against Japanese yen. Now there are multiple Forex pairs out there. I'm just giving you a few examples on there. Now, if you were to trade the Forex pairs, you'll find that the markets are open 5 days a week, 24 hours a day, which is similar to what gold is, which is what you're currently trading. It's very liquid, just like gold. So you've got a lot of buyers and sellers in there, which is fantastic. But what you'll find with Forex pairs is that it's most popular for beginners. And I'll explain why on a future slide as well. And so you can trade many Forex pairs, and you can have a look how they work. Even when you're like going on holiday, you know, you would probably, if you, let's say you're going to America, you know, you'd probably check the GBP USD, make sure you get enough dollars, get the right amount of dollars for your pounds that you're looking to exchange, and likewise. So you've got stocks as well. So you should be aware of big companies like Apple, Tesla. So you can look to buy shares in companies, and you'll see that stocks tend to move based off what we call company performance. So if you hear some news that's very positive, let's say for Apple, you might see their stock price increase. That's another type of trading as well. You have commodities as well, and that's the area that we're in at the moment. We trade obviously XAU USD, which is gold, but you can also trade assets like oil, silver, which is XAG USD. And as you know, a lot of these commodities are sort of influenced by sort of external factors like news, like the war that's happening, of course, and supply and demand. And like I said, you'll always see big trends in these commodities as well. Um, Crypto, you might be aware of crypto, of course. It was like the digital currency pairs. So you have, for example, Bitcoin, which is the most popular one. You can trade that against the US dollar. You've also might have heard of Ethereum, that you can trade that against the US dollar as well. The great thing about crypto is that it's open 24/7. So whilst the Forex markets close on that Friday, the Saturday and Sunday remains open for the cryptocurrency market. So you could potentially make market every day in the week. The only problem is with crypto is that it can be very volatile. So yes, that can create big opportunity, but also comes with big risk as well. So it's just something to be aware of if you are looking to trade crypto. You also have indices as well. So if you've not heard of indices, these are like your stock market indexes. So what you'll have in there is basically an indice. Like for example, I've given S&P 500. So that is a list of the 500 top American companies in the United States. You also have the US 30, which is also known as the Dow Jones Index. So normally when you go on like the channel Bloomberg or something, you'll normally see like these flashy numbers across the bottom of your screen, and you'll normally see SP 500, DJ 30, or US 30, sorry. You will always find these kind of indexes there as well, and you can actually trade them as well. And like I said, they are very news impacted as well, and can have big moves. So obviously great opportunity, and tends to sort of react against the US dollar as well. So when the dollar sort of gains strength, you might find the indices might go down, and vice versa. Then the last one is futures. Now, futures is a different type of trading. It's not probably something that you might get involved with, but you may do in the future. Hence the term futures. Sorry, dad joke for the evening. So contracts, they are actually physical contracts based on future prices. So you can still trade gold, indices, oil, but essentially these contracts have an expiry date. So not like your TPs and SLs that we do in our normal trading. And the other thing is that it's not actually available in our Vantage broker that we tend to use. So it's just something to be aware of, but maybe something that you might not trade in this moment in time. So hopefully that makes sense in terms of the types of markets they are. They're the main ones that we might tend to look at when it comes to trading. So what is it that we actually trade? Because when you're trading, for example, XAU USD, you're not actually physically buying gold, right? So I want you to guys know that. So if you are to trade gold, you're not actually, like I said, buying a block of gold. What you're actually trading is something called CFD. All right, so CFD stands for contracts for difference. So what that means is that you are actually trading that price movement. So when you are buying gold at a certain price and you've got your TP at, let's say, 50 pips, you're trading that price movement. You're making a profit or a loss based on that price movement only. Okay. So what that means is that you're not actually owning, like I said, a block of gold or anything. And like I said, whilst the markets are open, you can look to buy and sell at any point in time. But at the same time, whether you're trading gold, whether you're trading GBP USD, or whether you're trading US 30, it's going to be the same style in the sense that you're treating them like a CFD. So the only thing that's changing here is just the market behaviors. US 30 will behave different to gold, and will behave different to GBP USD. So what I mean by that is that, like I said, you are trading the difference in the price. That's all that we're doing. And what we're going to show you now is, hopefully when we go into TradingView, it's just where you can find these pairs and ultimately add them to your TradingView charts. So if you are on your desktop at the moment, you have your laptop open and you happen to be on TradingView already, feel free to jump on, and we'll make this a little bit more practical at this moment. So just give me a thumbs up if you can actually see my TradingView screen. So just make sure that you guys can see my TradingView. Okay, so I'm getting a lot of thumbs up, which is great. So if you remember last time on TradingView, and if you haven't remembered from last time, maybe refer back to the previous videos, you'll see that your TradingView chart might look similar to mine now, in the sense that you've got your candlestick pairs on here, sorry, candlestick patterns, And then you have your sessions element to this as well. So that was an actual indicator that I showed you guys last week or the week before. And you can see, for example, at London Open, was at 8 a.m. UK time. New York opened at 1 o'clock, and you got the crossover of London and New York here. And then you've got the New York session to finish the day. So the black area here is like your Asia and your Tokyo session. That's the area that I tend to be asleep in. So I'm not looking to trade in my sleep. But it's still an area where you can trade as well. Now, what you can do on here is that I want to show you actually where you can add your symbols. Now, I've actually gone ahead of time because this is what my trading view looks like, but you can see I've got all these pairs on the right-hand side here, and you'll see that I've actually neatly put them into groups. So I've got some pairs on here, which I've called EA pairs, which is my own Forex pairs. I've got commodities in here as well. I've only got these two in here, which is gold and US oil. I've got crypto in here, which is Bitcoin and USD. And I've got indices in here as well, which contains the S&P 500, NAS 100, which is another type of US index. You've got US 30, and I've got a few others in here as well, which I tend to sort of dabble in a bit. So how do you actually add these pairs into TradingView? What you can do is you want to click on the plus sign just here. So click on the plus sign, and then let's say I wanted to add GBP USD. So what you do is you'll type in GBP USD, and you'll see that there's a lot of GBP USD that comes up on here. So the one that I would recommend personally is the one that is your broker's GBP USD, because that price there for Vantage, for example, will be the same price as what you see in your MetaTrader when you're logged in. So just make sure that you are choosing that one where possible. If it's not available, there might be some pairs where the Vantage pair is not available, then any other closer one it will be fine. So even Forex.com, Oanda, FXCM, these are still fine. They're just different broker prices, but it won't be far off and the trend will still be the same. So once you've clicked on that symbol, you can add it to your chart. So you just hit enter and that will be added. So you'll do the same. So let's say I wanted to add now Bitcoin. So I'd go BTC USD. And then once again, you can look to add it on there. And you'll see that Vantage has it on there as well, Bitcoin USD, which is great. If you wanted to do it another way, you can actually look at Forex pairs. So I can actually click on Forex pairs here, and then you'll see a list of all the Forex pairs. If you want to look at indices, so let's say you want to look at S&P 500, then you know that you can just search for SPX, for example, and then you'll see S&P 500 on there. I'm not sure if Vantage actually is on S&P here. If not, then you can add any of these and you should be good to go. So I hope that makes sense. Just give me a thumbs up if that makes sense in terms of adding symbols, just so that I know that everyone's aware of that. Okay, lovely, that's great. So we've added some pairs, and hopefully, actually, yeah, I might just show you how to add the group as well. So what you can do is that you can actually right click and you can click on add section. So when you click on add section, and then you can see it's done a section 1 there as well, and it's sectioned them pairs. And then what you can do is you can actually move this pair over to that section 1, and then you can rename that pair as well. Rename there, I might call it Amrit pairs, and there you go. And then that's my Amrit pairs there, and that might be just like a group of currencies or pairs that you're looking to trade. And then obviously if you want to look at the chart for that, so I'm on GBP USD at the moment. If I wanted to look at XAU USD, you'll see then the chart will update with XAU USD. You'll be able to see at the top here gold versus the US dollar. I'm on the 5-minute chart at the moment, and you've got your chart on here. So again, likewise, if I want to choose S&P 500, you've got it on there as well. So you can toggle between your pairs here as well. Just seeing if there was anything else. Oh yeah, so if you wanted to like maybe move the panel across and give yourself a bit more space to look at the chart, you can do that as well. You also have like a change in the price as well, which is quite handy to choose. So if I choose XAU USD, what you will find on there is that there's a physical change in price in points and a percentage change as well. So when it's green, it means that it's gone up in price versus last time. And I think if you actually expand the bit at the bottom here as well, you can see a bit more details on this. What I like about this actually, it actually shows you like a long-term trend of gold for 2024. So it shows you at the start of 2024 versus the end of 2024 is the orange line. And you also have the green line, which is 2025, and then the blue line, which is 2026. So it shows you that for the last 2 years, that gold has been increasing in price, more so in last year than the year before. And you can see the same thing happening with the blue line for this year as well. So hopefully that makes sense. It just gives you a little bit of an idea of how TradingView works and how to sort of navigate through as well. If I haven't shown you already, you've got your times along the bottom here. Now, I want you to, very, very important to realize that when I'm looking at a candle, let's say I'm looking at this candle here, and you can see when I hover over it, it says Friday the 17th, and it says 13:20, so 1:20 p.m. So that's the time of when the candle opened. So the candle close would actually be 1:25 because I'm on the 5-minute chart. So just make sure that you guys are aware of that this is actually when the candle opened, that time is as well. And obviously you've got your time zones there. So let's head back to the slide for the moment, because what I'm actually going to show you here is what your journey should be if you're looking to add potential pairs to your arsenal. So you've got potentially obviously the same skill, the skill that you're looking to master, and that's obviously what we're focused on at the moment is gold. Now with the gold, what you can look to do is I'd probably recommend to add a few currency pairs as well. So in terms of currency pairs, what I'd look to probably add maybe GBP USD, Euro USD and USD JPY as your sort of starting point. These are known as some of the major pairs in the Forex market. So you'll tend to see a fair bit of movement in them as well. In terms of indices, if you're looking to explore indices, I'd probably start with something like the S&P 500, or shortly known as SPX. That's the one that has the least amount of movement between the three of the US 30 and NAS 100. However, all three of them tend to, majority of the time, move the same sort of way as well. So if you're just starting off, then I'll go with SPX. As you get more advanced, you can maybe try NAS 100, and then after that, I'll probably say US 30. Just bear in mind that US 30 does move very, very quick, and it's a bit of a beast, really. So if you can get very good at, for example, SPX, then US 30 will be a decent one to add as well. In terms of crypto, I'd probably stick to the couple, which is Bitcoin versus US dollar and Ethereum. Now, they tend to move fairly the same as well. If you're really a beginner, I'd probably start with Ethereum. But at this point in time, I'd probably just keep it fairly simple and stick to your Forex pairs and your indices for now, and then explore crypto later as you start to master the game, basically. So just a reminder as well that you're not actually learning any new trading or anything. You're still trading the same way as you do, but the only difference is that the markets are going to be different. So you're using your same skill set, but just applying it to different markets. So what I don't want you to do is I don't want you to take K signals and then start applying it to other pairs. No. So K signals is just gold only. Yeah, this is what we're looking at now in case you want to expand further and look at other pairs for your own analysis trading. Yeah, so just make that clear. Now, this is great because I'm going to start now going into more advanced stuff. Now, when I first started, I really wish someone gave me this little cheat sheet here. Now, I learned this through trial and error myself, right? And what you need to know from here, and I'm going to explain this line by line, right? And just bear with me because there's a lot of numbers on the screen here, but this is something that you guys really have to understand. You have to know how the pips look in the markets for different pairs that we have. Now, if I was to focus on the first one, and let's just work this through line by line. So this is your cheat sheet, and this is for looking at what 50 pips in the market looks like by the different sort of pairs that we have. So for Forex, for example, you're GBP USD. Now in the Vantage broker, it's known as GBP USD. In TradingView, it's also known as GBP USD. Now here, I'm going to try and use my mouse here. If you can see my mouse, yes, you can. So when you look at a price difference between two prices here, so let's say you enter a buy at 1.35026 and the price moves to 1.35526. Now the difference in price there, okay, if you just did one minus the other in your calculator on your phone or wherever it is, you're going to see a number like this, 0.00500. And that essentially in Forex pairs, normal sort of base currency pairs, is a 50 pip move. So it's the difference between these two red numbers here, 3502, 3552. That's a difference of 50 pips. Now in your broker with Vantage, your minimum lot size you can place is 0.01. So if you manage to successfully place this buy trade and it went 50 pips in your profit, a 0.01 lot size will get you $5 in the market. Now, $5 is obviously the US currency that we're in. You'd have to then convert that into pounds as well, which might be like £3.50 or something like that. So very, very obviously small profits. But I just want to show you from a minimum perspective what your minimum lot size is and what that gets you in the market. So obviously, if you wanted to place a 0.1 lot size, that will get you $50. A one lot will get you $500 and so forth. Okay. So I've got an extra column here, which I'll go through when we go through the other pairs as well. Now, I'm going to give you another annoying pair, which is USD JPY, right? So their numbers are slightly different. And the reason for that is because you've got 159.296 here and 159.796. So you've still entered a buy here. And this market has now gone 0.5 points in profit. So, and that in USD JPY terms is the same as 50 pips. So it's slightly different to GBP USD. The JPY pairs are always behave this way. So even with a 0.01 lot size, you make $3.15 here. You don't make $5. And the reason for that is because the base pair is JPY. So you have to convert that back into your US dollar currency, which gives you $3 and which then gives you a conversion into pounds. This is really important. You know what was really annoying, right, is when I first started trading, no one taught me about this. No one told me. So when I looked at the markets and I looked at my trading account, and I was like, why the hell am I not making the same amount as what I made 50 pips on the GBP USD? And I realized that it's because of the way the exchange works. So I really wish someone had shown me this before, because it made me realize that if I'm looking for 50 pips on USD JPY or 50 pips on GBP USD, I might want to trade GBP USD instead. So moving on to commodities. So now obviously you've got XAU USD here, and you should know, I'm hoping you guys know by now, is that when, for example, K sends out a signal and let's say that your market moved 5 points into profit, which I've got written down here, 5 points. So from 4740 to 4745, that's 5 points, that's 50 pips in gold. So a 0.01 lot size gets you $5. All right. So that's fine. I'm hoping everyone already understands that. And I am going to go on the charts as well and show you this properly. But like I said, if at this point this doesn't make any sense, then please go back to some of the previous sessions as well and some of the sessions on WAP and look at how to calculate pips or points on gold. Now, for these additional pairs here, so this is if you're trading S&P 500, NAS 100, US 30, these are your indices now. Now, the points work different on here. Now, in your Vantage broker, 5 point move on SPX, very similar to gold. Actually, it's the same as gold, 50 pips. The minimum lot size you can place on S&P 500 is 0.1. Now, if you place that and your market moved 5 points, you're not going to make $5. You're only going to make half a dollar. So in order to get the lot size to make $5 for S&P 500, SPX is going to be 1.0. So just in case you are trading SPX, you would want to place a 1.0 in your Vantage broker for a 5 point move is going to give you $5. All right. Now for NAS 100, for the market to move 5 points is 50 pips. Again, the minimum lot size 0.1 is the same thing. You're only going to make half a dollar. So you again just need to size up on your lot size there and make a 1.0 lot size. Again, I really wish someone showed me this right from the start. So please, please, if this doesn't make any sense now, it will in a future time in your trading career. So please, again, take a screenshot of this if you need to. US 30, now US 30, a 5 point move on US 30 is 50 pips. Again, same thing, 0.1 lot size, half a dollar is made. So a 1.0 lot size is going to make you $5. Cryptocurrency, so Bitcoin, again, the thing is with cryptocurrency, a 5 point move is tiny for Bitcoin, right? So that can move in a matter of seconds. So in actual fact, because it's so volatile, even a 0.01 lot size, which is the minimum lot size you can place on Bitcoin, you can make only like 5 cents here. So I think if you put a 1.0 lot size, that will get you to the $5. But please do not place a 1.0 on Bitcoin. So I forbid you to do that right now, if that's okay. Please, just at the moment, if anything, I'll probably stick to the currency pairs and maybe S&P 500 for now. Dip your toes into the water, and hopefully you'll start to gain a bit more experience from there. So far, so good. I know that was a lot of numbers, but just give me a thumbs up, either if you're on video or in the chat, just give me a thumbs up if this is all making sense and if this is actually useful information for you guys. Because like I said, I really wish someone had shown me this when I first started. And the only reason way I got to know about this is by actually placing trades on my live account. And I must admit, I remember placing 1.0 on Bitcoin, and let's just say that didn't end too well the first time I did that. So, and by all means, if you are trying different pairs out, maybe just open a demo account for some of these other volatile pairs, but I'm just trying to protect your account balances. I don't want to be hearing that you're making great money on the signals and all of a sudden you're blowing your account on another pair because Amrit said to trade Bitcoin. I am not saying that. I am saying please just protect your portfolio, protect your account, do your homework, research, understand how the markets move, and like I said, the only thing I'd recommend for Forex pairs and maybe S&P 500 just to start with, just to dip your toes in if you want to do that. Cool. So another advanced slide for you guys. Now, like I said, if this is too advanced, then not a problem at all, because eventually this information is going to click in when it's going to click in. So again, I really wish someone had shown me this right from the start, and it's something called average daily range. Now, I'm going to show you this on the charts because like I said, I'm going to do less slides, more chart time as well. So what I want you to understand is that when you're making pips in the market, whether it's Forex pairs, whether it's on the indices, whether it's on crypto, there's a certain amount of pips on average that the market tends to move in a day. So for example, I've got a little chart here which shows to you that XAU USD, for example, moves on average 1700, almost 1800 pips in a day. Now, how many pips do we tend to make on gold in a day on average? So we tend to make, I mean, if you look at, let's say I'm just trying to think of one of the signals off the top of my head. We tend to go for about 5 to 10 points minimum. Actually, how much did we make in the move on that Friday? That was a really nice move we made. I was about 300 pips, I think, from what I remember. So it was about 30 points, right? So just bear in mind that 300 pips out of 1800, it just shows you that how much opportunity there is in the gold market. Because if the market's moving on average 1800 pips a day, now if you're being greedy, you're gonna be like, well, why can't I make 1800 pips in a day? Easy now, right? We want to make sure that we take what we get from the market, we get in, get out, and we get on with the rest of our day, right? We don't want to be staying on charts 24/7, right? We want to get what's ours and get out, and get on with the rest of our day. That's what we are trading for, right? We're trading so we can become hopefully free. So if you're looking at GBP/USD, the average range on GBP/USD is just over 100 pips. So if you're going for a 50 pip move on GBP/USD, that's almost 50% of the daily range. You're trying to catch a half a day move on GBP/USD. So that doesn't make any sense. So for something like GBP/USD, even USD/JPY, some of these Forex pairs, maybe 15 to 20 pips might be your goal instead. But what you can do is then you can start to maybe increase your lot size so you get a certain amount of money from the market. But why do you think I'm giving S&P 500 as another potential alternative for you guys? Because it moves very, very similar in terms of the amount of pips per day. So it's less than gold, but there's still opportunity in there for you. There's still 1,000 pips there for you. If you want it, you can have it. But even if you get like 50 pips, 100 pips out of S&P 500 in a day, that's like what? That's 10% of the average daily move. Now, can you see why I've told you guys to stay away from like US 30 and Bitcoin for the moment? Because you're trying to find a 50 pip move from Bitcoin when it moves 27,000 pips in a day on average. Like, come on, man. Like that market moves big. So you've got to be quite advanced in your trading to understand how much you want to take from the market, especially from cryptocurrency. But is this slide useful for you guys? Like, just give me a thumbs up here. Like, is that useful to understand how much how much the markets move in a day? All right. Okay, cool. So I always get aware that sometimes I might try and go a bit too advanced too early. But the thing is that what I'm trying to give you here is information that you just don't generally see in standard sort of trainings. Like, you can go on YouTube, you can find standard basic trainings. They'll teach you, oh, this is how you work out pip value and all that kind of thing. I'm trying to give you the main source, basically. I'm trying to give you the source that actually can be useful and actually can be applied to your own trading. So that's the idea behind what I'm doing. So I'm hoping you guys are getting value out of that. So what I'm going to do is I'm actually going to get you onto the trading charts now as well. And what I'm going to do is I'm going to just choose a couple of pairs. I'm going to show you roughly like how much the markets move, right? So, okay, let's start off with gold. So let's give you some idea of some tools. So we've got gold already. So let's say, I'm trying to remember when that move was. It was part of this move from what I remember. I remember there was a breakout on Friday, wasn't it, where we got in from what I remember. So I'm going to get this ruler symbol. Yeah, okay, so this ruler here, and what it's called is called measure. All right, so when you click on that ruler, what you can do is, I'm going to just zoom in a bit here so you guys can see. So I'm going to just measure from this candle here, and you can see I've got this kind of blue box up here, and I'm going to go up, 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 and let's just say I'm going to go to around here, right? So this is, can you see on the blue box, you're going to see, hopefully it's big enough for you guys to see, you might have to see on a desktop or watch the recording back. So this is actually a 30-point move. So on the right hand side, I can't actually move my mouse because I've got it actually holding on this position here. You can see on the right hand side that there's a blue number which says 4798 from when I started to 4828. So that is actually a 30-point move, all right, which is actually 300 pips, okay? And then it also tells you that number of bars that happened in. So 13 bars means that there was 13 candles for that actual 30-point move there. And can you see that 30, oh, I can move my mouse, great. So can you see on here that the day started around here for gold, and where have we gone, sorry. Yeah, so Friday it started here. And you can see the market went down to this level here, 4768, and it went as high as around 4889. So if I just actually do the ruler from here, so if I'm just going to go, so we caught what, let's say a 30-point move, yeah, 300 pips. The market actually moved in the day, what was it, 121 points, 120 points on that day, all right, which is what, 1,200 pips. Yeah, so on that Friday there was 1,200 pips, 121 points or 1,200 pips to be made, and you managed to get a small chunk of that, which was that 30-point move, 300 pips. Okay, so you caught about a quarter of the whole daily range there just from that one move. So the way you would actually look at average daily range is that very, very easy. I've already given you numbers. I did all the hard work for you because I actually went back in time. I took the last 60 days of all the daily candles and actually worked out the average daily range for you. So you actually have all this information already. But if you're curious and you want to know how I actually looked at average daily range, what you can do is that you can look at your time frame here. You can click on the daily chart. So what this actually does is that this here now is the daily chart. So each candle is one day. So Friday's candle there is the 17th of April. Okay, and what we can actually do on here, if I just zoom in on this, I can do that same thing. I can do that ruler, right? So let's do that ruler from roughly about there to there. And what is that again? 122 points. That's what I just showed you, right? That's a 1,200 pips. So basically I went through every single candle. I didn't really, I found a shortcut way to do it, but I went through the last 60 days and I essentially found the average daily range. Now there's some days, for example, there, you know, the market moved a lot larger than probably average. You know, there's some candles which are smaller than others, but if you take an average over the last sort of 60 days, you know, that will get you roughly the average daily range, what I believe will be for the most, let's say the last 3 months. That's what it's literally covering. So it gives you an idea of what opportunity is in the market. So let's go on to S&P 500, and you can see on the daily chart here that S&P 500 has been very much in a bullish trend. So my hunch is that I'm going to carry on looking to buy S&P 500 if I was anything. It's not trading advice, please don't take that. But your bet would be that you would look to probably to buy S&P on the next when the market's open. So let's have a look again at the average daily range for the last recent day. The other way you can do this is actually just do the high minus the low. So can you see where my mouse is there? The high was 7155 and the low was 7045. If you do the difference between the two, that's going to give you the daily range for that day. So again, if I just get the ruler and just do a little kind of bam to there, that's about 108 points. So about 1,000, just over 1,000 pips on the day. So again, very similar sort of movement to gold there. So hopefully you guys get some value out of that. You have an idea of how much the markets are moving on a day. I'm trying to think if there's anything else I can look to add. Yes, there is actually. So if I go to GBP USD as an example, so one of your Forex pairs now. So I've covered gold and I've covered an indice. So now I'm going to just cover GBP USD as well. So let's just say that let's do the average daily range first for the Friday. So I'm going to get my ruler, my measure tool, and I'm going to go to the lowest point of the day, which was there, and I'm going to go to the highest point of the day. So GBP USD moved a fair bit. So you've actually got on here that the price moved 0.0094, which is actually 95 pips. So the market actually moved like 95 pips there. So if you're trying to catch, like I said, a 50 pip move, you'd have to get it from, that's like almost half the range for the day. So, let's say that you caught a breakout here. Let's say it was it's just a standard break. Oh, just the other thing to note as well. So when you go down, you'll see that the bar will go red. So that will tell you that the market's going down. It's up if it's going up. So let's say I caught like just that one bar move there, and you'll be able to see that that is 35 pips just there in that move. All right. So I hope you guys got value out of that. I'm just going to take you back onto the slides, because we're going to keep adding to TradingView on literally every session. So every session, your TradingView is going to get nicer and nicer. Remember, we're not going to clutter your TradingView, all right? So the idea is I'm not going to turn your charts into what I'm seeing here on the left-hand side here. I don't want it looking too busy, yeah? I like simple, less is more, okay? So, but what I am going to give you guys are tools that I believe could potentially help you. And the thing is, everyone on this call at the moment, you're going to have different trading styles. You might be what's called a naked trader, which is where you don't have any indicators or anything like that. You might be someone that likes all the numbers. You might like to be very, very technical and very, probability based, that kind of thing. So everyone's different, and you'll get to learn your style as you go through these sessions, and you start to pick up new skills as we go. So just to conclude, before I open the chat up for any questions, I want you guys to understand that hopefully after today's session, you're now aware of other markets that we have to trade, especially in Vantage. I want you guys to understand that we're not trading the physical asset itself. We are trading something called CFDs, which is actually just that price movement that's happening. I'm hoping you guys have now potentially added pairs already to your watch list on particular ones that you might want to add and maybe look into. I hope in particular that you've taken a screenshot of that lot size chart that I showed, that table, which is basically the lot sizes on the different pairs that we have and how much money you can actually make when you are using these lot sizes as well. I'm hoping you guys now know about ADR and how on average prices tend to move in a day, and that you shouldn't be looking hopefully to try and catch every single move or all that move in a day. Even if you aim for like, I don't know, let's say about a third of that daily move, that's huge. Like I said, in gold, we're happy with 5 to 10 points on gold, on a daily basis. If we can get that, then we're laughing. It's just about being consistent, get what's yours and get out the markets, get on with your day. You don't want to be lingering into trades for too long. Like I said, there's a big quote here. Once you understand how each market moves, then your trading can become more consistent. So what I mean by that is that just watch the charts. Just how does it behave compared to gold? Like, is there a correlation there? Is when gold goes up, does S&P go up? Does the dollar? Oh, you know what? Actually, whilst you're here, I'm going to add something else to your chart. I knew I forgot something. It's the dollar index. So the DXY. Now that is the strength of the dollar against, I think, majority of the pairs from what I remember. So this is telling you how the dollar is performing. All right. So there was a big drop in the dollar there, and then there was a big increase going there as well. So you might want to check what the dollar index looks like compared to, let's say, the S&P 500. Can you see that the dollar went down, the S&P 500 went up? The dollar went down. What happened to gold? Gold went up. All right. So just something just to bear in mind there. I forgot about that one, which is DXY. So just where it is on the plus sign, DXY, and you'll be able to find US dollar currency index. So make sure you grab that one. Sorry about that. I knew I forgot to add that one. So yeah, please make sure you add that one. Now, the next session is, we're moving fast now, right? So session 3 is already now wrapped up here. And the next session is going to be on candlesticks and market structure. Now we're going to start getting to the more juicy stuff. So not just looking at the candles, but actually trying to understand some patterns now as well, and giving you a bit more structure in the market in terms of understanding, where, for example, there are certain candle types, certain patterns that you might be able to recognize, you know, and just stuff that can be useful, right? There's probably about, you know, hundreds of candlestick patterns out there, but I'm just going to give you the ones that hopefully will give you the most benefit. So that being said, I'm actually going to wrap up the call there. And like I said, I hope you guys got value out of this. Just give me a thumbs up that you got value in this session today. And I really, really wish you guys the very, very best in this evening. Please rewatch this video again. The training will be up on the YouTube channel as well. And like I said, I hope you guys got value. And I really look forward to seeing you on the next session, which is, like I said, all about candlesticks and market structure. So have a great session, guys, and a great rest of the evening. Big thumbs up. And I really enjoyed this one. And I look forward to seeing you on the next one.